Question 1. Which of the following health insurance plans requires enrollees to choose a primary care physician (PCP) and obtain referrals for specialist care? A. Preferred provider organization (EPO). B. Health maintenance organization (HMO). C. Point of service (POS). D. High deductible help (HEC). Answer: B. Health maintenance organization (HMO). Explanation: an HMO plan requires enrollees to choose a primary care physician (PCP) who coordinates all healthcare services. Referrals from the PCP are typically required to see a specialist. This is one of the defining features of an HMO, aiming to provide cost-effective managed care. In contrast, PPO plans provide more flexibility with no referral requirement for specialist care. POS plans combine features of both HMO and PPO plans, but still require E for network services, though members can access out-of-network providers with higher costs. Question 2. Mr. Anderson is considering enrolling in a Medicare Advantage plan, Part C. What is the primary benefit of this type of coverage? A. It covers only prescription drugs with no other medical benefits. B. It combines hospital and medical insurance benefits and may offer additional services like vision and dental coverage. C. It is only available for individuals under the age of 65. D. It provides coverage for long-term care services such as nursing home care. Answer: B. It combines hospital and medical insurance benefits and may offer additional services like vision and dental coverage. Explanation: Medicare Advantage plans Part C are a type of Medicare health plan offered by private insurers approved by Medicare. These plans combine the benefits of Medicare Part A hospital insurance and Part B medical insurance, and often include additional coverage such as vision, dental, and sometimes even prescription drug coverage, Part D. Unlike the other options, Medicare Advantage plans do not cover long-term care, and they are generally available to people aged 65 or older, not under 65, unless certain conditions are met. Question 3. Mr. Robinson is considering purchasing a health savings account (HSA) eligible plan alongside an employer-sponsored high-deductible health (HSA). Based on this scenario, what is the primary advantage of using an HSA in conjunction with an AHP? HSA provides coverage for prescription drugs, which a HP does not cover. B. Contributions to an HSA are tax-deductible, and withdrawals for qualified medical expenses are tax-free. C. HSA can only be used if the individual has a chronic illness such as diabetes. D. The HSA allows for unlimited contributions regardless of income. Answer: B. Contributions to an HSA are tax-deductible and withdrawals for qualified medical expenses are tax-free. Explanation: an HSA, a tax-advantaged savings account that individuals with AHP can use to pay for qualified medical expenses. The primary benefit of the HSA is that contributions are tax-deductible, reducing taxable income, and withdrawals for eligible medical expenses are tax-free. This makes it a valuable financial tool for individuals enrolled in HSA. A is incorrect because the HPA still cover prescriptions. C is incorrect because HSA eligibility is not dependent on having a chronic illness, and D is incorrect because the IRS sets annual contribution limits for HSAs. Question 4. Which of the following is a key feature of Medicaid that distinguishes it from Medicare? A. Medicaid is a federal program that provides healthcare coverage for individuals over the age of 65. B. Medicaid eligibility is primarily determined by income and asset levels, with coverage for low-income individuals. C. Medicaid coverage is only available to U.S. citizens. D. Medicaid recipients must pay high premiums and deductibles for coverage. Answer: B. Medicaid eligibility is primarily determined by income and asset levels, with coverage for low-income individuals. Explanation: Medicaid is a joint federal and state program that provides healthcare coverage for low-income individuals, families, pregnant women, elderly adults, and people with disabilities. Eligibility is based on income and assets, and the program is designed to provide assistance to those who cannot afford health insurance. In contrast, Medicare is a federally run program primarily for individuals over the age of 65, regardless of income. While Medicaid generally covers U.S. citizens and legal residents, the eligibility requirements do not depend solely on citizenship, as some non-citizens may qualify for Medicaid. Medicaid recipients typically pay little to no premiums or deductibles, unlike Medicare. Question 5. In which situation would a health insurance claim most likely be denied due to a pre-existing condition under a standard health insurance policy? Yet, if the claimant develops a condition after the policy has been in effect for at least 6 months, B. If the condition was diagnosed before the policy's effective date and the policy does not cover pre-existing conditions. C. If the claimant has been continuously insured under the same policy for more than 10 years. D. If the condition occurs while the policyholder is traveling outside of the country. Answer: B. If the condition was diagnosed before the policy's effective date and the policy does not cover pre-existing conditions. Explanation: under many traditional health insurance policies, if a pre-existing condition is diagnosed before the policy's effective date, it may not be covered unless specific provisions are made for such conditions. This exclusion is most common in older policies, but has been modified by the Affordable Care Act cap. The cap prohibits insurers from denying coverage based on pre-existing conditions for most individual health insurance plans. However, if the policy in question does not follow guidelines, the condition may not be covered. The other options, C and D, are unlikely to result in pre-existing condition denial. Question 6. Which of the following best describes the primary role of an insurance agent when selling a health insurance policy? A. To process medical claims and ensure they are paid out to the provider. B. To provide clients with information about policy options, explain coverage details, and help them select the most suitable plan. C. To determine the premiums and benefits associated with the insurance policy. D. To represent the insurer in case of disputes with policyholders. Answer: B. To provide clients with information about policy options, explain coverage details, and help them select the most suitable plan. Explanation: the role of an insurance agent is to provide potential clients with information about various insurance policies, explain the details of coverage, and assist clients in selecting a plan that best fits their needs. Agents do not directly process claims. Option A. Determine premiums or benefits. Option C. Or represent the insurer in legal matters. Option D. However, they are responsible for understanding the products they sell, ensuring that clients make informed decisions about their healthcare coverage. Question 7. Mr. Evans is reviewing his insurance policy and notices that certain types of medical procedures are not covered. What is the term for these exclusions in his policy? A. Policy provisions. B. Riders. C. Limitations. D. Exclusions. Answer: D. Exclusions. Explanation: exclusions in a health insurance policy refer to specific services, conditions, or treatments that are not covered by the plan. These exclusions are typically listed in the policy's fine print. Riders, option B, are amendments to policy that add or modify coverage, while limitations, option C, refer to the restrictions placed on coverage for certain types of services or conditions. E.g., limits on the number of visits to doctor. Policy provisions, option A, generally refer to the standard terms and conditions outlined in the policy. Question 8. Which of the following is a common feature of consumer-driven health plans? A. They have low deductibles and high premiums. B. They are designed to cover only catastrophic health events. C. They are paired with health savings accounts, HSAS, or health reimbursement accounts, HRAS. D. They are primarily available to employees under group health insurance plans. Answer: C. They are paired with health savings accounts, HSAS, or health reimbursement accounts, HRAS. Explanation: consumer-driven health plans are designed to give individuals more control over their healthcare spending. EHES are typically paired with health savings accounts, HSAS, or health reimbursement accounts, HRAS, which allow individuals to save money tax-free for medical expenses. These plans typically feature higher deductibles but lower premiums. The goal is to encourage consumers to make more informed healthcare choices by using their HSA/HRA funds to cover costs before the insurance coverage kicks in. Options A, B, and D are inaccurate as they do not fully describe the OHP model. Question 9. When does an insurer in Idaho need to file an adverse benefit determination for a health insurance policy? A. Within 30 days of receiving the claim. B. Within 60 days if additional information is required to process the claim. C. Within 10 business days of determining that a claim will not be covered. D. Within 45 days of receiving the claim. Answer: B. Within 60 days if additional information is required to process the claim. Explanation: Idaho law requires insurers to notify policyholders within a specific time frame if they need more information to process a claim. Typically, insurers have 60 days to process a claim or notify the policyholder if further information is needed. If a claim is denied or benefits are adjusted, the insurer must provide a written explanation of the adverse decision. This time frame helps ensure that policyholders are informed about the status of their claims. Options A, C, and D do not accurately reflect the state requirements for adverse benefit determinations. Question 10. Which of the following best describes the role of reinsurance in the health insurance industry? A. It involves the direct payment of healthcare expenses on behalf of policyholders. B. It is used by insurers to limit their risk exposure by transferring a portion of the risk to another insurer. C. It guarantees coverage for individuals with pre-existing conditions. D. It reduces the need for managed care programs by limiting healthcare costs. Answer: B. It is used by insurers to limit their risk exposure by transferring a portion of the risk to another insurer. Explanation: Reinsurance is a mechanism used by health insurers to protect themselves from large or unexpected claims by transferring some of their risk to another insurer, the reinsurer. This helps limit the insurer's exposure and financial risk, allowing them to maintain stability in the event of catastrophic claims. Reinsurance does not directly handle payments on behalf of policyholders. Option A will guarantee coverage for pre-existing conditions. Option C. Additionally, while reinsurance can help manage risk, it is not directly related to reducing the need for managed care programs. Option D. Question 11. Which of the following types of health insurance policies is designed to cover the policyholder for medical expenses incurred due to accidents only? A. Major medical insurance. B. Accident-only insurance. C. Critical illness insurance. D. Disability income insurance. Answer: B. Accident-only insurance. Explanation: Accident-only insurance is designed to cover medical expenses that result from accidents. It does not provide coverage for illnesses or other medical conditions unrelated to accidents. Major medical insurance, option A, covers a broader range of health issues, including diseases and surgeries. Critical illness insurance, option C, provides a lump sum benefit for serious illnesses like cancer or heart attacks, while disability income insurance, option D, offers income replacement if the policyholder is unable to work due to illness or injury. Question 12. Under the Affordable Care Act, which of the following provisions applies to health insurance coverage? A. Insurers may deny coverage based on pre-existing conditions. B. Coverage for essential health benefits is optional. C. Young adults can remain on their parents' plan until the age of 26. D. Insurance companies can limit coverage for prescription medications. Answer: C. Young adults can remain on their parents' plan until the age of 26. Explanation: The account includes a provision that allows young adults to stay on their parents' health insurance plan until they turn 26, regardless of whether they are married, living with their parents, or financially dependent on them. This provision ensures that young adults have access to health coverage during a time when they may be transitioning to independent employment or education. The other options, A, B, and D, are inaccurate, as the ACA prohibits denying coverage based on pre-existing conditions, mandates coverage for essential health benefits, and prevents insurers from placing lifetime limits on coverage for essential benefits. Question 13. Which of the following is an example of a managed care plan? A. Health maintenance organization. 8MR. B. Point of service POS plan. C. Preferred provider organization PPO. D. All of the above. Answer: D. All of the above. Explanation: Managed care plans are designed to control healthcare costs while maintaining the quality of care. These plans typically involve networks of doctors and hospitals that agree to provide services at reduced rates. Health maintenance organizations, HMOS, point of service POS plans, and preferred provider organizations, PPOS, are all types of managed care plans. HMOS typically require members to choose a primary care physician and get referrals for specialists, while PPOS offer more flexibility in choosing healthcare providers without referrals. POS plans combine elements of both HMO and PPO plans. Question 14. What is the primary purpose of a waiting period in health insurance policies? A. To allow the insurance company to investigate the policyholder's medical history. B. To ensure that the policyholder's premiums are paid on time. C. To prevent individuals from purchasing insurance only after they are diagnosed with condition. D. To allow the insurer to calculate the appropriate policy rate for the policyholder. Answer: C. To prevent individuals from purchasing insurance only after they are diagnosed with a condition. Explanation: The waiting period in a health insurance policy is often used to prevent individuals from purchasing insurance only after they are diagnosed with a medical condition. During the waiting period, the insurer does not cover certain conditions or services, such as pre-existing conditions or specific treatments. This helps prevent adverse selection, where only individuals with immediate medical needs purchase insurance. The other options, A, B, and D, are not the primary purposes of a waiting period. Question 15. Which of the following describes the coordination of benefits in a health insurance plan? A. The insurer's ability to cancel policy when the policyholder exceeds the coverage limit. B. The process used when policyholder is covered by multiple health insurance plans to determine which plan pays first. C. The requirement for policyholders to seek treatment from any network provider to receive full benefits. D. The practice of insurers working together to set premium rates for health policies. Answer: B. The process used when a policyholder is covered by multiple health insurance plans to determine which plan pays first. Explanation: coordination of benefits is a process used when a policyholder is covered by more than one health insurance plan, e.g., through both their employer and a spouse's plan. This process determines which plan is the primary payer and which is the secondary payer. The primary plan pays first and the secondary plan may cover the remaining costs. This ensures that the policyholder does not receive more benefits than the actual cost of care. The other options are not accurate descriptions of coordination of benefits. Question 16. Which of the following is typically covered under a basic health insurance policy? A. Routine physical exams and screenings. B. Elective cosmetic surgery. C. Hospitalization for acute illness. D. Long-term care for chronic conditions. Answer: C. Hospitalization for acute illness. Explanation: basic health insurance policies typically cover essential services such as hospitalization for acute illness, emergency care, and basic medical treatments. Routine physical exams and screenings, option A, may not be fully covered under basic policies, and elective cosmetic surgery, option B, is generally excluded. Long-term care, option D, is often covered under specialized policies such as long-term care insurance, not basic health insurance. Question 17. What is a characteristic of a high-deductible health PHP? If the plan covers a higher percentage of medical expenses after the deductible is met. B. The plan generally has a lower deductible and higher premiums. C. The policyholder is required to pay a higher deductible before coverage begins, but premiums are lower. D. The plan provides comprehensive coverage without any out-of-pocket expenses. Answer: C. The policyholder is required to pay a higher deductible before coverage begins, but premiums are lower. Explanation: high deductible health PHPs typically have a higher deductible than traditional plans, meaning the policyholder must pay more out of pocket before the insurance starts to cover medical expenses. However, ATHEs usually come with lower premiums, making them more affordable in terms of monthly payments. These plans are often paired with health savings accounts (HSAs) that allow policyholders to save money tax-free for medical expenses. Question 18. Which of the following is a benefit of using telemedicine services in health insurance? A. It reduces the need for in-person doctor visits, saving time and healthcare costs. B. It eliminates the need for prescription medications. C. It provides unlimited access to healthcare without any cost. D. It ensures that all medical issues can be resolved remotely without the need for specialists. Answer: A. It reduces the need for in-person doctor visits, saving time and healthcare costs. Explanation: telemedicine allows patients to consult with healthcare providers remotely, typically via video calls or phone consultations. This reduces the need for in-person visits, saving both time and healthcare costs. While telemedicine can be useful for diagnosing and managing some conditions, it does not eliminate the need for prescription medications, option B, or access to specialists, option D. Additionally, telemedicine services are not typically free of cost, option C. Question 19. Which of the following is not a required essential health benefit under the Affordable Care Act? A. Maternity and newborn care. B. Mental health and substance use disorder services. C. Vision care for adults. D. Prescription drugs. Answer: C. Vision care for adults. Explanation: under the account, insurance plans are required to cover a set of essential health benefits, including maternity and newborn care, mental health and substance use disorder services, and prescription drugs. However, vision care for adults is not required to be covered as part of the essential health benefits, although many plans may choose to offer it as an additional benefit. Question 20. If an individual wants to maximize their savings in a high-deductible health per AHP, which of the following strategies would be most beneficial? A. Opt for the lowest deductible available to minimize out-of-pocket costs. B. Open a health savings account (HSA) to contribute pre-tax dollars toward medical expenses. C. Choose an insurance plan with high monthly premiums to avoid paying a deductible. D. Focus only on preventive care and avoid using insurance for other medical needs. Answer: B. Open a health savings account (HSA) to contribute pre-tax dollars toward medical expenses. Explanation: an HSA allows individuals to set aside pre-tax money to cover qualifying medical expenses, which can help save money in a high-deductible health plan. The funds in an HSA can roll over from year to year, and withdrawals for eligible medical expenses are tax-free. While focusing on preventive care is important, using an HSA, a more effective way to maximize savings in HE, choosing the lowest deductible, option A, or high premiums, option C, may not be as cost-effective in the long run. Question 21. Which of the following is true about a preferred provider organization? PPO Plan A requires a referral from a primary care physician to see a specialist. B. It offers more flexibility in choosing healthcare providers compared to an HMO. C. It typically has lower premiums but higher out-of-pocket costs. D. It does not cover out-of-network care under any circumstances. Answer: B. It offers more flexibility in choosing healthcare providers compared to an HMO. Explanation: a PO plan allows policyholders to see any healthcare provider without a referral, offering greater flexibility compared to health maintenance organizations (HMOs), which often require referrals from a primary care physician. While PPO plans typically have higher premiums than HMOs, they offer more freedom in choosing healthcare providers, including out-of-network providers. Option D is incorrect. Question 22. Which of the following health insurance policies typically covers long-term care services such as nursing home care or home health care? A. Major medical insurance. B. Long-term care insurance. C. Disability income insurance. D. Accident-only insurance. Answer: B. Long-term care insurance. Explanation: long-term care insurance is specifically designed to cover the costs associated with long-term care services, including nursing home care, home health care, and other assistance for individuals who are unable to perform activities of daily living. Major medical insurance, option A, covers acute illnesses and injuries, but does not typically include long-term care. Disability income insurance, option C, provides income replacement for those who are unable to work, and accident-only insurance, option D, covers only accident-related expenses. Question 23. Which of the following best describes the concept of moral hazard in health insurance? A. The likelihood that a policyholder will overuse medical services once they are insured. B. The risk that an insurer will deny coverage for pre-existing conditions. C. The practice of increasing premiums after a policyholder files a claim. D. The risk that policyholders will not file claims for necessary medical services. Answer A. The likelihood that a policyholder will overuse medical services once they are insured. Explanation: moral hazard refers to the tendency for individuals with insurance coverage to take on higher risks or overuse medical services because they do not bear the full financial burden of those services. This occurs because the insurance company absorbs the costs, which can lead to unnecessary healthcare utilization. Question 24. What is the purpose of a health insurance premium? A. To cover the administrative costs of the insurance company. B. To determine the amount of benefits the policyholder will receive. C. To set the deductible amount the policyholder must pay. D. To pay the cost of the policyholder's medical treatments. Answer A. To cover the administrative costs of the insurance company. Explanation: a health insurance premium is the regular amount a policyholder pays to maintain their coverage, and it helps cover the insurer's administrative costs as well as the cost of claims. The premium does not directly determine the benefits the policyholder receives. Option B. Or the deductible amount. Option C. The deductible is a separate amount that the policyholder must pay before the insurer covers the cost of care. Question 25. Under the Affordable Care Act, account which of the following is prohibited? A. Charging higher premiums based on gender or health status. B. Offering coverage for essential health benefits. C. Providing subsidies for low-income individuals. D. Allowing dependents to stay on their parents' insurance plan. Answer A. Charging higher premiums based on gender or health status. Explanation: the ACA prohibits insurers from charging higher premiums based on gender, health status, or pre-existing conditions. This helps ensure that all individuals have access to affordable health insurance. The other provisions, B, C, and D, are part of the ACAS requirements, such as offering essential health benefits, providing subsidies for low-income individuals, and allowing dependents to stay on their parents' plan until age 26. Question 26. In health insurance, what is an out-of-pocket maximum? A. The total amount a policyholder must pay in premiums each year. B. The highest amount a policyholder will pay for covered healthcare services during a plan year. C. The amount an insurance company will pay toward a claim. D. The limit on the number of visits a policyholder can have to a healthcare provider. Answer: B. The highest amount a policyholder will pay for covered healthcare services during a plan year. Explanation: the out-of-pocket maximum is the most a policyholder will pay for covered healthcare services in a given plan year. Once this amount is reached, the insurance company covers all additional covered expenses for the remainder of the year. This includes deductibles, copayments, and coinsurance, but does not include premiums. Question 27. What is the key difference between a health maintenance organization (HMO) and a preferred provider organization (PPO). HMOs require policyholders to choose a primary care physician and get referrals to specialists. B. PPOs only allow policyholders to see in-network providers. C. HMOs cover all out-of-network care at a higher rate than PPOs. D. PPOs are typically less expensive than HMOs. Answer A. HMOs require policyholders to choose a primary care physician and get referrals to specialists. Explanation: the key difference is that HMOs require policyholders to choose a primary care physician (PCP) and get referrals from the PCP to see specialists, while PPOs allow policyholders to see any healthcare provider without a referral, providing more flexibility in choosing providers. PPOs generally cover both in-network and out-of-network care, though at different levels, and are typically more expensive than HMOs. Question 20. Which of the following is an example of a non-participating provider in health insurance? A. A healthcare provider who accepts the insurance company's terms and conditions for payment. B. A healthcare provider who agrees to provide services at discounted rates for policyholders. C. A healthcare provider who does not have an agreement with the insurer to provide discounted services. D. A healthcare provider who accepts Medicaid or Medicare as a primary form of payment. Answer: C. A healthcare provider who does not have an agreement with the insurer to provide discounted services. Explanation: a non-participating provider is one that does not have a contract with an insurance company to provide discounted rates for services. Patients who see a non-participating provider may have to pay higher out-of-pocket costs or receive a lower level of coverage for those services. Participating providers options and B have an agreement with the insurer to offer services at agreed upon rates. Question 29. Which of the following types of insurance provides coverage for expenses incurred due to the death of the policyholder? A. Life insurance. B. Health insurance. C. Disability income insurance. D. Long-term care insurance. Answer A. Life insurance. Explanation: life insurance provides a death benefit to the beneficiaries of the policyholder when the policyholder passes away. Health insurance option B covers medical expenses, while disability income insurance option C provides income replacement if the policyholder is unable to work due to illness or injury. Long-term care insurance option D covers expenses related to long-term care services but does not provide a death benefit. Question 30. What is the primary advantage of an employer-sponsored health insurance plan? A. The premiums are typically paid entirely by the employer. B. It offers the most comprehensive coverage available. C. It often has lower premiums and more favorable group rates than individual plans. D. It allows the employee to select coverage from any insurer. Answer: C. It often has lower premiums and more favorable group rates than individual plans. Explanation: employer-sponsored health insurance plans often offer lower premiums and better group rates because the employer is typically negotiating on behalf of a group of employees, allowing for cost savings, while some employers pay part or all of the premiums. Option A. This is not always the case. Employer plans may not always provide the most comprehensive coverage, and employees usually cannot select coverage from any insurer. Option D.